Hello and welcome to this edition of registration under the GST Act. So we know that tax is payable by the person who is going to make the supply. In short, we call such person a taxable person. So a taxable person is a person who is registered under the GST law and also a person who is liable to be registered. So this is a very important point to note down. So for the purpose of registration, this threshold limit has to be checked. Okay, so we have to see three criteria. First one is every supplier of goods and services is liable to be registered. So it is very simple, every supplier, but of course there will be exception. But one thing which you should keep in mind is that every supplier has to register himself under this act. Point number two, in the state or the union territory where he makes such supply. So first thing is that every supplier has to get himself registered where in the state where he is making the supply. And point number three, if his aggregate turnover exceeds the threshold limit for the financial year. It is for the financial year. So now the next question comes to your mind is, what is this aggregate turnover? Yes, now we are going to use this aggregate turnover in two areas. Number one, at the time of deciding his threshold for which he is going to be liable for registration, and number two, when he is going to take the advantage of composition scheme or option to pay tax at a concessional rate. So for this, notifications are being given. So turnover as such is nothing but the volume of your business. So if we see aggregate turnover, you can see in the diagram that it includes four things. Number one is going to be taxable supply, number two exempt supply, number exports, number four interstate supplies. All this for a person with the same PAN on all India basis. Okay, so what we have to exclude, you can see on the right side, is nothing but your IGST, SGST, CGST, UTGST and supplies which are of inward supplies, and that too on reverse charge basis. So we have to exclude this from the turnover. So this will be your aggregate turnover for the purpose of your threshold computation. So the next question which might arise to you all people is that what is this inward supply with RCM? Yes, you must be aware that there are many supplies on which the recipient has to pay tax on reverse charge mechanism. So keeping that in mind, okay, so we have to remove this turnover, okay, from the recipient, and this turnover will be part of the turnover of the supplier, but the tax is paid by the recipient. I'll give an example so that you can understand that better. For example, if you're going to have a goods transport agent or a person who is doing legal services, he is going to raise an invoice, but that will be, the tax will be paid on reverse charge basis by the recipient. So now what we are telling is that this part of inward supplies has to be excluded from his turnover. The person who has given the supply, yes, this portion of turnover will be part of the person who is supplying. For example, the GTA or the legal services, whoever is supplied those services, they will show it as part of their turnover. Okay, so let's take an example. There is a private company A, okay, and it is going to pay GST for the sitting fee of the directors. Now can you tell me who is going to see on RCM basis? The company A Limited is going to make the payment of GST, okay, but will it be part of the turnover of the A Private Limited? Of course not. It will be part of the directors turnover. Now we are telling aggregate turnover. Aggregate turnover of all the branches is what we have to take. Okay, it's not that we should take only for one portion, we have to take for all the branches. And now how to decide on the branches? The branches which belong to the same PAN. If your PAN is common for those branches, you have to just take the total of the turnover of all the branches. So if you see on the left side, we say there is going to be taxable supplies, exempt supplies, exports. So what about the exempt and the export part? So some people might have mixed supply. So what about them? So I will explain it with an example. Suppose there is a company, it is engaged in providing oil, it is supplying some machine oil, as well as it is having in petrol. So petrol is not GSTable, but the machine oil is taxable. So how should you deal with this? Will the turnover be taken? Of course, yes. Your answer should have been yes, because we have to take both taxable and non-taxable into account for the threshold computation. The next point which we have to understand is that many companies might have something called an agency, right? So they may outsource their part of work to another person who will do it on the behalf of the principal. So what about this? An aggregate turnover to include all supplies made by the taxable person, whether on his own account or on behalf of all his principal. So let's assume M Limited is appointing B Limited as his agent. But B Limited is doing two things. He is doing on his account as well as he is doing on behalf of M Limited as an agent. So when we compute the turnover, should we take the one which is he is doing on his own account alone, or should we take both? That is what he is doing on own account as well as on as an agent. Yes, of course we have to take both. Now we will see what is the difference between an aggregate turnover versus a turnover in a state. Okay, what is the difference between both of them? Many people will interchange these words. We have to be very careful while dealing with these words. Okay, so aggregate turnover, it is used to determine your threshold, your composition scheme and your concessional rate of taxation. With respect to turnover in a state, once the person is liable to be registered, okay, he will follow the turnover of the state. Once the person is eligible for a composition levy, okay, he has to pay tax at some rate. So to determine that, we have to take the turnover of the state. So what happens? Your aggregate turnover will determine your threshold, and after that you go for the turnover of the state. Next we will see with respect to job work. Okay, if a principal is going to outsource his work to a job worker, okay, and if the job worker is registered, so he can make the supply of the goods directly from the premises of the job worker. Okay, it will be no supply as if it is made by the principal. Suppose the job worker is not registered. If he is not registered, means the principal has to declare the job worker's place as additional place of business in the principal's registration. Okay, so there is a process of amendment by which the principal can add this job worker who is unregistered as his additional place of business. Okay, so if the goods are going to be removed directly from the place of the job worker, still it will be part of the turnover of the principal and not the job worker. Okay, now we are coming to a very important point, which is a threshold limit. So our entire discussion was only so that we understand this threshold application. Okay, let's see what is this threshold limit now. As per section 22 subsection 1, the threshold limit is 20 lakhs in a financial year. What does that mean? Every supplier whose aggregate turnover is about 20 lakhs has to register himself in the state or territory where he makes the taxable supply. 20 lakhs is 10 lakhs for some of the state. Those states are special category states. It's very important to note that as per Article 279, special category states are Himachal Pradesh, Assam, Jammu and Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh and Uttarakhand. However, the explanation under section 22 clearly says only 4 states are going to be special category. Now, what are they? It is Mizoram, Manipur, Nagaland and Tripura. M, N and T. So, Mizoram, Manipur, Nagaland and Tripura. Total limit is going to be 10 lakhs for these 4 states. And high alert, there is a notification on 7th of March 2019 which says that a person who is engaged in exclusive supply of goods, I repeat, it is only supply of goods, for them the limit is 40 lakhs. Okay, when the financial does not exceed 40 lakhs, do not need to register. but there are some exception to this. We will see one by one. The first exception is people who are going to have themselves registered under a compulsory registration. This compulsory registration section 24, which we will deal in the next video. Okay, so first point is those who have to register themselves. Compulsory registration, it is mandatory, they can't escape. Okay, this is one. The second exception is a person making supply of ice cream, edible ice with or without cocoa, pan masala and all goods containing tobacco or manufactured tobacco substitute. Number 3, persons engaged in the intrastate supply of Arunachal Pradesh, Uttarakhand, Meghalaya, Sikkim, Telangana, Puducherry and the special category states. So why are we telling intrastate? It is intrastate. Why intrastate? Because intrastate is falling part of compulsory registration. The fourth one is person who goes for voluntary registration. You can see in the table that how Puducherry will have 20 lakhs. So Puducherry and Telangana will have 20 lakhs for goods and 20 lakhs for other goods and other services. But for other states, it is going to be 40 lakhs exclusive goods and 20 lakhs for goods and services. With respect to the 4 special category states, that is Manipur, Mizoram, Nagaland and Tripura, you can see it is 10 lakhs, whether it is goods or with goods and services. The next part of the table is, if you see Jammu and Kashmir, Assam, Himachal Pradesh, Arunachal Pradesh, Meghalaya, Sikkim and Uttarakhand. Okay, we can see for Jammu and Kashmir, Assam and Himachal Pradesh, it is 40 lakhs, and with goods and services it is again 20 lakhs. The benefit is available to them. But when it comes to Arunachal Pradesh, Meghalaya, Sikkim and Uttarakhand, it is 20 lakhs, because they were part of our exception, which I said just few minutes back. So this table is very important for every one of us to know that for which state what is the threshold limit. Make it more clearer, this table brings better clarity. States with threshold limit of 10 lakhs for both goods and services are going to be Manipur, Mizoram, Nagaland and Tripura. The next table is going to be states with 20 lakhs for both. That is, it is going to be Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana. When it comes to states with threshold of 20 lakhs for goods and services and 40 lakhs for goods, it is going to be Jammu and Kashmir, Assam, Himachal Pradesh and all other states other than these states which were mentioned. So this is a very important table to remember. Okay, especially the last one is very critical because it has 2 variety in that. The first thing is that if your threshold is 20 lakhs for goods and services and 40 lakhs for only goods, so J&K, Assam, Himachal and all other states. Otherwise the first category, that is with 10 lakhs, is easy to remember. Like I said, it is NT. So Manipur, Mizoram, Nagaland and Tripura. And with 20 lakhs, whatever be the situation, it is going to be Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana. So I said SAM put, that is Sikkim, Arunachal Pradesh, Meghalaya, Puducherry, Uttarakhand and Telangana. When it comes to the 2040, it will be J&K, Assam, Himachal Pradesh and all other states. Okay. Question arises, from where should you take the registration? Okay, so there is so many states, you are dealing with all the states, so you need to take registration from all those states from where you are going to make supply. If your supply is exempt or non-taxable, you need not take registration in that state. Of business succession because of death of a sole proprietor, okay, and there is a scheme of amalgamation, demerger, and it is approved by the court, then what should you deal? the transferee or the successor has to register himself. So next we will deal with section 24, compulsory registration. This will deal in the next video.